Good morning friends and welcome to North Seller Wealth. I am Mahindra Rao and today in this video we will be talking about overnight funds. Overnight fund as a category. In the last video we have made you understand what are the different categories of debt mutual fund which are available on the basis of horizon and on the basis of theme. So there were different categories of debt mutual fund which are available, and we will try and make you understand different categories which are available to invest in debt mutual funds. The reason is the many investors now know what is equity mutual fund. They have invested in equity mutual fund, but many investors do not know what are debt mutual funds, how to invest in debt mutual fund, what are the advantages of investing in debt mutual fund, what are the risks associated with debt mutual funds. So debt mutual fund is also a category which one can invest in and take the advantage of a debt category. So today in this video we will be talking about overnight mutual fund. So let's understand what is an overnight mutual fund, how it works, what are the advantages, how you will be able to make money from that category, and whether this category is for you or not, right? So let's understand what is an overnight mutual fund. The overnight mutual fund are debt funds that lend to corporates for one business day. The corporates eligible for borrowing through this route are regulated and are mostly banks, insurance companies, mutual fund, provident funds and NBFCs. So this fund, the mutual fund, lend the money to whom? They will be lending the money to the banks, the insurance companies, the non-banking finance companies, the provident funds. If they have such requirements, they can approach a mutual fund and ask for this fund to lend them the money. So there is a category of fund which is available. As a layman, as a small investor, as a retail investor, I have an opportunity to park that money for that 1 day, 2 day, 3 day or maximum up to 7 days and take advantage of it. So what are the advantages of overnight funds? Why should one be investing in an overnight fund? So let's understand the advantages of overnight funds. The advantage of overnight funds is it is the safest debt fund which can be used to park money for few days. If you have some money which you want to park for few days, like 3 days, 4 days, 5 days. Now if you are running a business and you have some surplus liquidity available which you will not be utilizing it for next 5 to 10 days, you can park that money into the overnight fund and you can take advantage of the returns or the interest generated from that particular fund. So the second advantage is there is no risk of default, as the borrowers need to give prescribed securities as collateral. This is the fund, whenever someone is borrowing from this fund, they have to give collateral as a security, so there is no chance of default. You have to understand, if there is a zero risk associated with the fund, there will be low returns that will be generated from the funds. Now let us understand how do overnight mutual fund work. So before understanding what is a overnight fund, so how does this fund work? It is very important. How do the fund work? So to understand how overnight fund works, you need to know where the money is invested and how the returns are generated. Where the money is invested and how the returns are generated, you will automatically come to know how the fund is working. So where do the money is invested in the overnight mutual fund? So first instrument where they will be investing is CBLOs. CBLOs are collateralized borrowing and lending obligation. So these are short-term money market instruments where securities are used as collateral for borrowing or lending money. So whenever you are lending money to someone, you take a collateral, just like a gold loan or a home or a loan against property. As a bank will take a security of gold as a collateral. So if someone defaults on that loan, the gold is seized off. Or loan against property, if someone defaults on the loan repayment, the property is seized off. Same way, but this money is lended to the banks, the NBFCs, provident fund, the insurance company. The chances of getting default here is very less, because this will impact their credibility in the market, and no company, no banks, no insurance company will ever want their credibility to be impacted. And these are short-term money which is lended to them for 2 to 3 days or 4 days or 5 days, and not more than a week, right? So, and that too is backed by collateral. So your money gets invested into CBLOs which are backed by collateral, so there is zero default risk here. The other investment that they invest is overnight reverse repo. This involves selling securities with an agreement to repurchase them the next day at a slightly higher price. So they will sell a bond at a 99 and tomorrow that the same bond will be purchased at 100 rupees. So you make a 1 rupee ka profit here. So this is how they will be investing in overnight reverse repo and making returns out of it. And then there are many money market securities which are available for next 3 to 4 days ka maturity. They will be investing in money market instruments. Money market instruments can be anything like a commercial paper, certificate of deposits, interbank deposits, right, at treasury bills. So they can invest in any instruments available at that given point of time which are having a maturity of less than 7 days. So this is where the money of overnight mutual fund is invested. Understand where the money will be going whenever you are investing in overnight. In equity mutual fund, the securities are different. In debt mutual fund, these are the papers that they will be investing in. So these are very stringent and strict SEBI norms which are to be followed whenever they are investing in a debt category, and especially overnight and liquid mutual fund, because the first thing that they need to provide is liquidity and no default. Right? The SEBI regulations mandate that overnight fund invest only in assets with overnight maturity. This restriction is in place to ensure the fund maintains a high liquidity and can meet redemption requirements. So 10 lakhs invested tomorrow can be withdrawn day after tomorrow. That can be withdrawn 3 days later. So that money has to meet the redemption requirement. So the funds are invested in such a way. Now, if you see the portfolio dynamics of any overnight mutual fund, those are majorly cash and cash equivalent, because these are immediate cash, just like a savings bank account. Whenever I deposit 1 lakh today, and if I go and withdraw it tomorrow, it is available. It is just like my savings bank account, and I get some interest on it. So savings bank account also do provide me as interest rate per annum basis, which is somewhere around 2.5% to 3% to 4%, depending on bank to bank. But these are very liquid cash which is available. So same way in the overnight mutual fund also, the liquidity is available. The portfolio of our overnight fund is replaced daily, reflecting the strategy of holding securities very short maturities. Portfolio which I have today will not be there tomorrow, because that is already mature. So day after tomorrow it will be again different, because that is already mature. So they keep on rolling that money and buying new bonds on a daily basis to provide for that liquidity and do not get stuck with the redemption requirement. Few examples of overnight fund which are available in the market, and we have taken it from Value Research. So Axis Overnight Fund, Bank of India Overnight Fund, Canara Robeco Overnight Fund, Mirai Asset Overnight Fund, Nippon India Overnight Fund, and this fund have been able to generate more than 6% per annum basis. So if I am depositing my money in a bank, if I am investing in an overnight mutual fund, I will be making more returns on it, right? Both are taxable. Take a taxation, we will talk further. Both are taxable, but again this will be giving me much better returns than my savings account. So if I have a surplus cash of more than 10, 15, 20, 25 lakhs, I can park. Even 2 lakhs, 3 lakhs amount can be invested. So you can take an advantage of it and make the most out of it. So whenever you are planning to buy a house, there is a surplus cash which is available. So instead of keeping it in a savings bank account, because sometimes the decision takes 2 years, sometimes the decision takes 2 months also, depending on the availability of the property and the right choice which you want to make. So that money can be parked in overnight fund. So these are the categories which are available. Now let's understand the holdings, where the money is getting invested. So if you see the holdings, these are majorly treasury bills which are invested, and the treasury bills are issued by RBI. So there is no risk of default which is there. So whenever you are investing into this category, there is no default risk. There is amped liquidity availability, and you can withdraw any given point of time. So now the question arises, who should be investing in this fund? Why should I invest in an overnight fund? Why should I not keep my money in a savings bank account or park it somewhere else? First, investors with a very short term investment horizon. Now if you want to invest for a shorter horizon, if you have a surplus cash, which I have discussed earlier as well, now for the next 7 days, 10 days, you have a 10 lakh of cash which you want to deploy somewhere, which has come to you, which has to be paid to someone, right? Whenever that small term money is available, that money can be invested into this category. Overnight funds are ideal for those investment horizon of 1 week. The fund itself says that it should not be invested more than 1 week, but the returns what they have given in 1 year is more than 6%, right? So the flexibility is the big advantage of our overnight funds over liquid funds, which charge, and there is no exit load charges. So you will be taking away all the money whatever is there on the investments. Second option that you would be investing, why you should be investing in a overnight fund, is the medium to root investment in equity fund. Now if I have a lump sum cash available to be invested in equity market, but I don't know how the market will be behaving in the next 1 month, 2 months, 3 months, 6 months. So the right way to invest in equity market is to average it out by doing an STP. So what you do is you invest all your money in an overnight fund. Example, if supposedly I want to invest 5 lakhs today in any equity mutual fund, but I don't know what the market will be tomorrow. What I will do is I will invest all the money in overnight fund and start a systematic transfer plan on a weekly, monthly, daily basis from debt to equity. So what happens is, on the 5 lakhs which is invested, it is very liquid cash which is available. This will also give me some returns on my investments, and I will be investing all my money from debt to equity and averaging out the cost price of my investment. So if there is a market correction which is happening, I will be able to buy at a lower price, and if there is a market upside, then again also I will be making better returns of investing through my portfolio. So the average cost of my investment in equity will be lower when I go through an STP route. So if I am doing that, then this is the right fund to be invested in. Now let's talk about taxation on overnight funds. So there are two income which we can generate. One is a dividend income and the other is a capital appreciation. Whatever dividend the fund will be giving is directly taxed in the hands of the investors. So that is taxed as per the tax slab. That income is clubbed to the total income what an investor is generating, and whatever bracket he is into, 10, 20, 30%, it is taxed as per that. Same with capital appreciation. What is capital appreciation? It is your purchase price. It is your sale price minus your purchase price. If you are selling at 110 rupees and if you are bought it at 100 rupees, that 10 rupees is your capital appreciation. So that capital appreciation will be taxed. Now how that will be taxed is, in a short-term capital gain tax, if you are withdrawing your money before 3 years, in this category you are withdrawing before 3 years, because this is a short-term fund. It is not more than 7 days to 1 month. So whatever profit you will be making, whatever capital appreciation you will be making, will be clubbed to your income and taxed as per your tax slab. If you stay invested beyond 3 years, then there will be a long-term capital gain tax, and there will be a indexation benefit which you can avail. You can add inflation to your purchase price and take the advantage of indexation, and you will be taxed at 20% of the capital gains that you have made into your portfolio. So this is about the taxation. So this is all about overnight mutual fund that we have understood. So in summary, if we talk about, overnight funds serve as a vehicle for investors seeking low risk. If you want low risk, high liquidity with a focus on generating income through short-term interest payment. Advantage here is, by investing in a short-term instrument, we get the advantage of prevailing market interest rates. So if there is hardly any change, because in a 7 days time there is hardly any changes which will be there in the portfolio, because there will be no immediate change in the interest rates, right? So we can take the advantage of the prevailing market rates and take a maximum benefit out of it. To summarize, we have understood what is an overnight fund, what are the advantages of overnight fund, how do overnight fund mutual fund works, where do they invest the money, right? What is the source of their income, who should be investing in overnight fund, and what is the taxation in the overnight fund. Hope so you have taken advantage of this video and understood what is an overnight mutual fund is, and take a right decision whenever you are doing your investment. And keep in mind that there is an option available in a debt mutual fund category where you can park your money and make better returns than your savings and fixed deposits. Thank you so much guys for listening. Signing off, Mahindra Rao. Do consult your financial advisor before making your investment decisions. Thank you so much. Bye bye.